Here we have it. The first tick on the Nifty, very quiet, absolutely flat.
Things have been very, very quiet since morning, and it slipped now in the last 1 hour.
For the markets, they continue to remain very choppy. We have 16 points of an uptick on the Nifty.
25-point change on the index, and things are, 18,600, 620. Round about there. 44 points on the Nifty, 18,643, which is, 3 minutes, less than 3 minutes away from market closing.
Hello and welcome to Markets Today. Well, the show where we highlight all the 6 hours of the day's trading action in just 5 top headlines. I'm Nigel D'Souza. Let's run you straight to the headlines of the day. Bulls remain in charge. Market gains for the 4th straight session. The Nifty and the Sensex hit fresh 5-month highs. The financials lead from the front. Nifty Bank and Mid-Cap Index end at record highs for the 2nd straight day. JK Cement rallies over 2% after it beats the Q4 expectations. Jubilant Pharmova takes a beating on receiving a US FDA OAI for its Montreal unit. Ujjivan Finance, Small Finance Bank and RBL Bank, they surge on new board appointments. Force Motors revs up on effecting a turnaround. Shoba ticks up on strong collections and lower debt. Sharp margin expansion buoys Hikal, while margin slump and weak demand hurts Stovecraft. Axis Bank CEO Amitabh Chaudhary warns of rising credit risk, with fintechs being in a weak spot. He also expects a long pause on interest rates and the bank's margins to trend down for a few quarters. But on return on equity, he expects it to stay healthy. Nifty Metal Index falls 1%. Steel prices come off 3-year lows. Iron ore hits its 1-week high, and ferrous metals see a good week but remain under pressure. Well, here's what we have lined up for you on the show. In market opinion, we have Matt Orton of Raymond James Investment and Manishi Ray Chaudhary of BNP Paribas. And in corporates, we have Mr. Rajneesh Kapoor of JK Cement and Sandeep Jain of Monte Carlo Fashions. Well, it was another good day for the bulls as the market gained for the 4th straight session. The Nifty and the Sensex, they ended at fresh 5-month highs and are only 1% away from those record highs. The broader markets rose in line with the blue chips. Both the Mid-Cap Index and the Nifty Bank ended at record highs for the 2nd straight session. Financials, they remained a firm support in today's market rally. Prashant Nair is standing by to fill us in with all of those details. Prashant?
One day and one step closer to an all-time high on the Nifty. The Bank Nifty, of course, made a new all-time high, and today it made a fresh all-time high in the last hour of trade. But on the Nifty, we are still yet to make it. We're not very far away at all. 18,887 is that number. The momentum has been pretty strong, supported by foreign inflows, which continue to remain strong. Now, today, action happened in the last hour on the banks more so, and the graph will tell you that because it was also the expiry for the FinNifty contract, and you see these moves come through. So, starting 2:30 and especially after 3 p.m. on the banks, the move was accentuated. Actually, in terms of gainers, it was all financials. HDFC Life, Bajaj Finserv, Bajaj Finance, Kotak Bank are the ones which really stood out. Nothing very large or meaningful on the way down as far as large caps are concerned. Broader market, single stocks is where you had such large, rich moves and, in a very broad arena. Oro Pharma, RBL Bank, Nuclear Software for the 3rd day running continues to do very well. Hikal, Ujjivan Small Finance Bank, where there is some regulatory relief. The markets responded. Jindal Saw, Aptech, Monte Carlo, Markson, Sirma, AI Engineering, Repco Home Finance. Again, this week has seen Repco add about 20% to its kitty. Sapphire Foods, etc. The breadth of the move has been truly impressive. Not just today, but over the last many sessions. There were losers as well. Actually, the market breadth was more even, Stevens, almost 1:1. So a few downside movers. RVNL, Ircon, the rail infrastructure stocks saw some pullback. CET came into the losing list in the second half of the day. Stovecraft, the company spoke to us in the morning, said the demand environment actually is pretty soft. Campus Footwear reacting to poor numbers. Tube Investments, Jubilant Pharma were some of the others, where there was some news involved as well. Over to the US markets, which are coming after a day's holiday. And the question in the US is, can the US markets continue on the upside after last Friday's powerful 2% move on the NASDAQ? And I think that handoff tomorrow morning will be important to see. Back to you.
Thanks a lot for that, Prashant. Well, let's get you some market opinion that we got earlier today. Matt Orton Chief market strategist at Raymond James Investment believes that the broad-based rally in the Indian markets over the past few months is encouraging. Let's hear him out.
I've been getting progressively more bullish on India because the fundamentals are there. Earnings have largely been positive, and we've seen continued strength through some key parts of the overall economy. And I think over the past month, what's really most encouraging about the rally that we've seen is that it's broad-based. It's happening across cyclicals and some more secular growth pockets of the market. So you're seeing banks, you're seeing even information technology. I hadn't been that positive on IT and IT services, and we've seen bottom. We've seen a lot of those companies coming out of consolidation, and that's encouraging to me. So India is moving up pretty close to the top. I would tell investors right now to use any downside a little bit more opportunistically.
Well, in more opinion, Manishi Raychaudhuri, Asian equity strategist at BNP Paribas, said that it's been a mixed picture when it comes to earnings and that investors must focus on sectors seeing an earnings upgrade. Let's listen in.
Over the last 1 to 3 months, the earnings downgrades, as far as the consensus EPS estimates are concerned, they're down somewhere between 1 to 3%. Now, there are some sectors that have moved up. Banks are one example. Industrials is a second example. Select automotives is a third example. And there are some others that have moved down and those have taken away from the earnings upgrades. The most important one that comes to my mind are IT services. It's kind of a mixed picture as far as the earnings season is concerned. But I think investors would have to remain focused on those sectors which are seeing some kind of an upward earnings estimate trajectory.
Well, moving to the second headline now, JK Cement rallied over 2% after reporting a beat in the fourth quarter on the back of better realizations. The consolidated sales volume saw a double-digit growth, while margins also improved sequentially. Mr. Rajneesh Kapoor, the Chief Operating Officer, expects double-digit growth of around 15% in FY24. He expects them to outpace the industry growth. He also lays out the company's EBITDA per ton goals. Let's hear him out.
In terms of our growth in FY24, we are expecting to grow 7 to 8% more than industry because we do have new capacities which are there with us. So I'm looking at a double-digit growth of close to 15% in their business. 1,000 rupees per ton in terms of our EBITDA margin would still not be very high. So that, of course, remains the directional goal for industry. In terms of pricing, as you said, I think we in cement industry are eternal optimists. We always hope that, things will improve because the kind of demand-supply gap that we have, it's always going to be a challenge to, see the price increases coming very soon.
Well, staying with earnings then, Jubilant Pharmova reported a loss of over 100 crores in the fourth quarter. The margins also shrunk on a year-on-year basis. Revenues came in higher as compared to the same quarter last year. However, the stock tumbled over 5% in trade on receiving a US FDA notice for its Montreal unit. Ekta joins us to fill us in with more on that. Ekta.
Well, multiple pieces of news which are really plaguing Jubilant Pharmova. It is first the numbers. The revenue was higher on a year-on-year basis, but the EBITDA margins, while they did see a sequential recovery, it was still lower year-on-year by around close to 300 basis points, so 13.1% versus 16.2%. It was a loss this quarter for the company as well on account of impairment charges of around 171 crores, which was related to intangible assets. The net debt rose to over 2,100 odd crores in FY23 as well versus 1954 crores on a year-on-year basis. Now, with regards to the additional piece of news where they have received an official action indicated status, which is the worst out of 3 classifications by the US FDA post an inspection. They do classify a plant within 90 days, and this official action indicated status just increases the probability of further regulatory action on the plant. So they have received it for their Montreal facility. As per the US FDA, they might now withhold approvals of any pending applications or supplements, which is the normal course of business for any facility that receives an OAI. But remember that this is not the only regulatory issue Jubilant Pharmova is facing. They also have an import alert on their Roorkee plant, which in fact the company said that they are engaged with the US FDA on remedies remediation of that particular import alert. Separately, we do have some management changes which have taken place. Hari Bhartia has now decided to step down from the position of MD with effect 31st May, which is tomorrow. Hari Bhartia will, however, continue as co-chairman, non-executive director on the board. Priya Vrat Bhartia has now been appointed the role of the MD with effect June 1st, 2023. A lot of developments taking place in Jubilant Pharmova. The street doesn't seem to like it.
Thanks a lot for that, Ekta. Well, Monte Carlo as well saw solid performance in a seasonally weak quarter. The revenue and the profitability saw healthy growth and margins remain constant at around 14%. However, there was a surge in advertisement as well as other expenditure. We caught up with Mr. Sandeep Jain, the Executive Director at Monte Carlo Fashions, to discuss the road ahead. Let's hear out what he had to say.
As far as demand is concerned, I think we are cautiously optimistic as there is some cut in the discretionary spending and there is some effect of inflation also. But we are very confident going forward. The reason is that we are having a good sales even in May also. And also going forward, we see that this growth continues.
Well, let's shift focus to some stock-specific news then. Ujjivan Small Finance Bank and RBL Bank, both of them rallied close to around 6%. The RBI-appointed director had stepped down from Ujjivan Small Finance Bank. Abhishek joins us to fill us in with more details on that. Abhishek?
RBI nominee exits Ujjivan board. So RBI had appointed an additional director, that is Mr. P. N. Raghunathan, who has now stepped down from the board as on 29th May 2023. So P. N. Raghunathan stepped down is ahead of his term, which was to expire, way ahead in November 2023. He was appointed as an additional director on 29th November 2021 for a period of 2 years. So before his term could end, he has actually exited, which is a good sign given the fact that RBI had appointed him to look into the board of Ujjivan Small Finance Bank. So in this context, will RBL Bank be the next one to see the additional director which was appointed by RBI to step down ahead of his term? That is a question that market is factoring in. So RBI had appointed Yogesh Dayal as an additional director on the board of RBL Bank on the day that Vishwavir Ahuja had stepped down from his role of MD and CEO, that is 25th December 2021. So Yogesh Dayal was appointed for a period of 2 years and his term was to end on 23rd December 2023. Back to you.
Well, stay with us, Abhishek. Repco Home Finance as well was buzzing in trade. The stock surged up more than 10% on the back of positive commentary coming from its management. The company is expecting 20% growth in sanctions and a 12% growth in loans for the next fiscal. Abhishek, you're tracking this stock too? Tell us more.
Well, to begin with, the management has guided on disbursals as well as loan growth. So they expect about 20% growth in sanctions and disbursals in FY24 and about 12% loan growth in FY24 on conservative basis. So company expects turnaround in growth performance of key states, that is Gujarat, Pune in Maharashtra and Kerala. So they may look to raise rates on upcoming monthly reviews, which will aid in terms of the net interest margin and spreads being on the healthier side. So management has guided for a net interest margin of about 4.8% to 5% and a portfolio spread of about 3% to 3.3% in FY24. Cost to income ratio is expected to decline in FY24, which means operating efficiency will improve. Management expect credit cost of about rupees 25 crore in FY24 and they expect to reduce gross NPA by about rupees 100 crore in FY24 as well. So stage 2 or loans overdue between 61 day and 90 day, that is at 13% in FY23, which is expected to be below 10% in FY24. So worst is over in terms of stress flow from restructured portfolio as well, is what the management has highlighted in their con call. Back to you.
Thanks a lot for that, Abhishek. Well, moving to the third headline today. Apollo Hospitals is under some pressure after missing street estimates on the net profit front. The company reported a net profit of around 146 crores. That compares with an estimate that we had of around 190 crores. The revenues were bang in line with what we were working with. Ekta joins us to fill us in with a quick analysis on that set of numbers. Ekta?
Well, overall, you'd have to say that it was largely a mixed quarter for Apollo Hospitals. While the revenue was in line with the estimates at around 4,300 odd crores, what disappointed the street was that the margins came in at the lowest level that we've seen in FY23. It came in at around 11.3% versus estimates of around 12 odd percent, and did not recover on a Q-on-Q basis as was anticipated by the street. The profits also came in at around 145 odd crores. The street was anticipating around 190 odd crores this quarter. Now, in terms of the key verticals, it was the healthcare business, which is basically the hospitals, which was up around 21% on a year-on-year basis. The margins managed to expand to over 18% versus 14%, but did come off a little bit on a sequential basis. The digital health arm, which is basically the omni-channel play Apollo 24/7 along with the pharmacy business, those losses or the EBIT losses expanded to over 80 odd crores versus over 75 odd crores in terms of losses last quarter, and that seemed to have disappointed the street, and possibly commentary will be most important from Apollo Hospitals. Their conference call is at 2 p.m. tomorrow afternoon. The street will want to know the guidance with regards to the digital health business, breaking even, fundraising, the GMV achieved for the year, and what the outlook would be going forward.
Thanks a lot for that. Ekta explains why Apollo Hospitals came off the high point of the day, ended virtually at the low point of the day. Well, Force Motors gained close to around 20%, was locked up after reporting a turnaround quarter. The company reported a profit after seeing losses in the same quarter last year. Sonia Shana joins us to fill us in with a quick analysis on that one. Sonia?
Oh, absolutely. Very strong numbers coming through for Force Motors. And as you rightly pointed out, this is a turnaround quarter for them, both in terms of the quarterly performance as well as for the full year. They've now returned to profitability, and that's what the street has liked. But not just that, the company has also reported a very strong growth on the top line in Q4. It's a 70% growth on the revenues, almost at 1,500 crores. And even if you look at the full year profits, has come in at 152 crores. This compares to a loss of 75 crores year on year. Now, what went right for Force Motors? As we know, Force Motors manufactures commercial vehicles. They manufacture commercial vehicles for a whole range of sectors, whether it's for the agriculture space, whether it is for the commercial space. They manufacture buses as well. And this entire space has picked up in a big way. They also do auto ancillaries. The earnings have been very good because volume growth has come back in a big way. Supply side pressures have eased. Raw material costs have subsided. And that's something that the street likes. 20% up move on Force Motors this morning.
Noted, Sonia. Thanks a lot for that. Well, staying with outperformers, then Hickel surged close to around 8% on the back of a good showing in the operating profits for the fourth quarter. The company reported over 540 crore rupees in revenues. That compares with around 500 crores in the same quarter last fiscal. Sonal Bhutra joins us to fill us in with the key highlights and why the street liked these set of numbers. Sonal?
It was a good set. After quarters of disappointment, there has been some recovery, and that's what the street is liking. On a YY basis, revenues were up 9%, EBITDA was up 48%. There is a margin expansion to the tune of 400 basis points, leading to a profit growth of 74% for the company this time. Both their segments have done well. In the pharma segments, on a YY basis, it's a flattish performance, but what street is liking is there has been a sequential recovery by the company here. So revenues at 309 crore rupees are higher on a quarter-on-quarter basis, flat sequentially, and EBIT as well has seen a massive jump on a YY basis to come in at 36 crore rupees. The company says they are seeing enhanced traction from existing as well as newer customers in their CDMO space. The crop protection business saw a good improvement on a YY basis, with revenues coming in at 236 crore rupees and EBIT almost doubling on a YY basis at 31 crore rupees. They say a couple of factors worked here. The first is positive price movement across the product basket, and they also saw an improved product mix which worked for their crop protection business. And good commentary and good numbers is something which is leading to this positive rub-off on the stock price as well.
Well, Sonal, we can't let you go at just that. Shobha as well charged ahead in trade. That one was up close to around 2%. The company reported its best ever quarterly sales, I think of around 1,200 crores in the fourth quarter. Sonal, tell us why the street liked this set of numbers. It came off the day's high, but what are brokerages making of it?
It was a good set. We knew the operational update already back in April, and it was the best ever quarterly sales for the company in quarter gone by at 1,207 crore rupees. In more details that have come by in the presentation, their collections are up 10.2% as well. So the liquidity part of things are also looking good. Additionally, they have been able to reduce their debt for the 11th consecutive quarter. Their net debt is at an 11-quarter high, standing at 1,640 crore rupees. In FY23 itself, they cut down debt by around 640 crore rupees. So that's a positive. Jefferies has come out with a note where they say that they have upped their pre-sales estimates by 4 and 5% for the next 2 financial years, and strong cash generation is something that they like. The net debt reduction continues to be a big positive for the company. Management said that legacy contract projects, they are going out of the revenue recognition pie, and the newer projects will now take place, and that will be higher margin projects as well. PAT margins should rise by 6% is what Jefferies says by FY24, with the medium-term target around 10%. So margin expansion is also something which is on the cards. They maintain a buy on the stock.
Welcome back. You're still with us on Market Today. Well, let's run you through the rest of the headlines that we're tracking for you. The fourth headline today, Axis Bank has been one of the best performing large bank stocks this month after reporting a solid set of numbers in the fourth quarter in April itself. Now, speaking to CNBC-TV18 earlier today, the MD and CEO, Mr. Amitabh Chaudhary, told us that deposit costs are likely to increase further, while net interest margins could contract going ahead. He also warns of rising credit risk, with fintechs being in a weak spot. Let's hear him out.
Yes, we saw an increase in deposit costs in quarter 4, financial 23, and we expect the deposit costs to increase further as the repricing continues to happen. However, and so I would expect the margins to trend down a little bit in the next couple of quarters, but our hope is that we should be able to maintain margins in the zone, which we've talked about. And several sectors, we are seeing signs of additional capacity being created in the private sector. So our view is that the capex is slowly, gradually coming back. The numbers which are being talked about are higher than what we have heard before. I think the confidence is slowly coming in. I think there is also the expectation that the government will continue to stick to all the policies they've announced. Larger banks have taken lower credit risk. They're sitting on the lower end of the risk curve. While there is a long tail of NBFCs and fintechs which are taking a bit higher risk, relying on not necessarily income, but some factors and matrices which demonstrate income to give loans. And if there was a kind of the credit cycle going the wrong way, you will see an impact coming through there rather than necessarily into our portfolios. As of now, things stand. There is no negative trend which we are seeing in our numbers, but that in itself worries us that why are the credit costs not picking up a little bit? And that's why we're even more watchful than before to ensure that, if there is any sign of any negative trend, becoming a real trend line, that we obviously change our parameters and become even more careful about who we're lending to and what we're lending to.
Well, the fifth headline today, the metal index fell 1% today. Separately, steel prices have come off 3-year lows. Iron ore as well hit a 1-week high, and ferrous metals are seeing a good week, but they continue to remain under a little bit of pressure. Manisha Gupta joins us to run us through a quick roundup of all the metals action. Manisha.
Well, the last couple of sessions for the metals were good, but that hasn't lasted long enough. And today we've seen profit-taking come back in yet again. Well, the strength in US dollar, which is trading at a 10-week highs versus the other currencies, continues to weigh on. It is about the high treasury yields as well, which is weighing. And then the markets have seen the economic data that came in from China and US. Much of that has been on the weaker side. The street is still expecting or waiting for the China data when it comes to retail sales and home numbers. Manufacturing data from US will come. On Friday, you have the US non-farm payroll data as well. So ahead of that, and an expectation that the data is not going to be so strong, is where we are looking at profit-taking coming in for many of these metals. Though the street is still looking at the fact that the China could come out with a stronger stimulus in this week or the next, and that could be supportive. At this point in time, when you look at the individual fundamentals, they are supportive. Inventories are down. The smelting numbers are on the weaker side. And the markets also are looking at the fact that as and when the demand comes back, you will see a very sharp rebound here, and that is because most of the money managers, hedge funds are short on commodities. As soon as they start unwinding their positions, it is going to be a big buy coming in, but that clearly is not the case today. Yet another day when we are looking at weaker metal prices continuing. So you have copper trading very close to 7-month lows, aluminum is trading at a 3-week lows, zinc prices close to their 26-month lows, and that perhaps goes on. Most of these metal prices, ferrous and non-ferrous, today have traded in negative.
Thanks a lot for that, Manisha. Well, on that note, though, we'll have to wrap up on this edition of Markets Today. Thanks so much for watching.